Something very strange is happening in the stock market right now. Oil is screaming higher, inflation is flashing red, yet investors still buy AI stocks like none of that matters. That's not normal, it's a warning. You see, AI has become this shield holding everything together. But here's the scary part. The moment that shield breaks, well then the market could reprice faster than you could ever imagine. Now in this video, I'm gonna explain everything that's happening, what we can expect moving forward, and a few stocks that I'm looking at myself. What we're looking at here is the S&P 500 on a weekly time frame. Now you guys can see just how high this has actually gone. I mean, pretty much since March here in 2026, where we seemingly found a bottom, right? The S&P 500 is up about 21%. And if we have a look at the Buffett indicator, right? Well, then it's the highest, the most overvalued it has ever been in history. You can see the top line here signals extreme danger, and the few times where the market actually hit that level, like in 2020 and in the year 2000, well then again what followed was a major crash. So in 2020 that was a 33, almost 34% crash, and of course during the dot-com crash here it was nearly 50%. Traders on Kalshi and other prediction markets are currently pricing in a 56.1% chance that the S&P 500 will in fact trade above $8,000 at the end of the year. 40%, almost 41% believe that it will trade above $8,200 by the end of this year. Now, here's the thing, right? The reason why the market is this high is extremely narrow. It all has to do with AI and AI earnings. So let's have a look at this, right? This was actually something I shared on my Twitter a couple of weeks ago, and I just want to highlight how much AI is actually dragging up this market. So we have the SPX 2-year normalized return. That means with the AI stocks and AI earnings, and it's up about 42%. And if we now exclude all the AI stocks, right, well, then that looks significantly different, and we're only up 16%. That is a 26% difference, meaning if we had no AI stocks, right, well, then the market would only be up 16%, and that is assuming the market would ignore headlines, oil, and inflation like it's doing right now. So realistically, the S&P 500 would probably be closer to break even or even negative. You see, normally when oil spikes and the geopolitical risk increases, well then again, markets get extremely nervous. And we can see that by looking at this very chart. So the yellow line at the bottom here is oil, and the red line is of course the S&P 500. Now having a look at the late 80s, right, we could see that oil jumped all the way up to about $21.6 a barrel, and that caused a crash within the S&P 500. We saw it again here, right? Oil climbed up to $39, almost $40 a barrel, and we saw a minor crash within the S&P 500. We saw it again here during the dot-com crash, right? Oil topped in, and of course, the S&P 500 saw a massive crash, and it just keeps happening throughout history. Now, it's important to say that just because oil goes higher doesn't automatically mean that the stock market will go down, just like we saw here, throughout the early 2000s, where oil was in fact rising, and so was the stock market. Rising oil can also sometimes signal strong demand, like a manufacturing expansion and an overall good economy. But what we're seeing right now with oil at about $100 a barrel is a supply disruption. It does in fact not signal that there's demand and expansion within the manufacturing sector. It does signal that we have a supply disruption. And so normally, right, this should make the S&P 500 go down due to all the uncertainty that that brings, the high inflation and so on. But because of the AI sector, the S&P 500 continues to rally. So, in other words, the AI optimism is so strong that it essentially acts as a shield for the stock market. Now, sure, we do see headlines like this. Stocks dip on new Iran attacks as oil prices rise. But again, if we have a look at what actually happened, the futures for the US S&P 500 slipped 0.1%. And the Europe's stock 600 index, right, fell 0.4%, and they recovered pretty much instantaneously. So in other words, they are in fact not dropping, at least not a significant amount on these headlines. So if inflation, oil, and geopolitical risk is all signaling a massive crash, why is nothing happening? The answer is simple, right? The AI sector is still strong enough to distract investors from pretty much anything. And the clearest example of that today is what Jensen Huang, NVIDIA's founder, just said about the Marvel company. You see, Jensen Huang said this essential company, which is Marvel, is primed to join the $1 trillion club. And we can see that shortly after, it jumped up 33%. And I can see that the stock market actually recently opened, and now it jumped up to 48% since Jensen Huang said that this might be the next next trillion-dollar company. Now, this is not just some random stock pumping. The reason why Marvel matters and the reason why it has gone up like 48% that fast is because AI is no longer just about GPUs. The next bottlenecks are AI data centers, right? Networking, optical infrastructure, and everything else needed to actually connect these systems. Now, at the time of this recording, right, the Marvel market cap is sitting at 254 billion, right? And I want to point out that just a few months ago, it was at 144 billion. That is a significant increase in a relatively small time frame. Now, that happens because Marvel offers a solution to the new demand that we're seeing, right? So no longer just GPUs, which was a huge reason why Nvidia went that parabolic. And again, Jensen Huang believes that this stock could potentially be the next trillion-dollar company, and that would mean that there's still a significant amount of gains to be made, given the fact that the market cap is only relative to its target sitting at 254 billion. And of course, this company, Marvel, right, is backed by Nvidia, which again is the largest company by market cap in the entire world, and nothing even comes close. Second one being Apple, but again, they're not even close. So the trade is rotating, right? The market is rotating from who makes the AI chips to who builds the full AI factory, right? This is where the opportunity is. Everyone already knows Nvidia. Again, we just saw it. It's the largest company by market cap. But now the market is trying to find the next layer underneath Nvidia. The companies that provide networking, optical equipment, memory, power, cooling, and data center infrastructure. Now, of course, there are other stocks out there right now that I'm personally looking at who, in fact, does offer the solution, such as Coherent. They offer things like optical pipes, lasers, and components. Right now, it is trading at $415 a share. We also have Broadcom, right, which is actually just broken highs here and skyrocketed by about 18% since, late May here. So just over the last few days, it's gone up over 18%. Reason being, they offer networking chips, right? Switching fabric, optical DSPs, silicon photonics, and of course, one of my favorites, Oracle. Okay, I believe Oracle is very undervalued right now, and I do see this as a great trade. You see, Oracle offers AI training infrastructure, which is super important. Then we have AI inference infrastructure, NVIDIA GPU clusters, and data center capacity. And I also just want to point out that the pattern we're seeing within, the technical pattern we're seeing within Oracle right now is almost identical to what we saw before a massive rally of about 190%. So it's again this triangular pattern, A, B, C, then a massive rally, and we're seeing the exact same thing now, A, B, C, and the rally has already started. And if we now compare Oracle to other stocks in the space like Broadcom, right, well then we can see a night and day difference. I believe that Oracle has some catching up to do. This again is hitting new highs. It's just going parabolic. We have a look at Coherent. It's the same story, just new all-time high after new all-time high week after week. So again, I do believe that Oracle in 2026 is in fact a great investment. But here's the warning. Oil is trading at around $100 a barrel. And that can bring inflation back. So we can have a look at the actual chart right now. It is sitting at $96 a barrel, pretty much just trading within this range, which it has been in since the initial breakout that scared the entire market. So the risk is that oil keeps rising, right? And as long as the Strait of Hormuz stays closed, well, then it is in fact going to continue rising. And the Fed has absolutely nothing they can do about it. They're stuck. They can't do anything. They can't cut the rates. They can't hike the rates. Inflation is high. Interest rates are high. And it's actually looking a lot like stagflation. I am not saying it is stagflation, and I'm not saying we're going to go there. I personally do not see us, going towards stagflation. That's a whole other discussion. But I am saying that inflation sitting at 3.8%, by the way, it was at 2.4% in February, makes it incredibly hard for the Fed to cut rates, which means high valuation tech stocks, like all the ones we just looked at, become more fragile. And again, as I explained, right, if we zoom out here on a 10-year scale, well, then you can see that the interest rates in the US are sitting at 3.75%. Which again is pretty high. So again, right now inflation is high and interest rates are high, and the Fed can do absolutely nothing. So the real tension is AI pulling the market higher, as we've already seen, and oil trying to pull it lower. And it's essentially whoever wins that competition who decides the next major move within markets. Now, again, I, for one, do not believe Iran or the US can afford to continue this war, nor have any interest in doing so. I believe that at this time, the vast majority of this war is ego driven, and that is just historically not sustainable. Now, the US Iran have a 60-day proposal on the line, which again means that they were going to extend the ceasefire 60 days and also reopen the Strait of Hormuz for that period. Now, official US sources have told Al Jazeera that the framework still needs President Donald Trump's final approval. And if we actually get that, well, then that would be great news. In fact, I believe that oil will come down significantly if at least break the range that we're currently in, if we actually get that headline that it is in fact confirmed. The reason why oil is not responding at all is because Donald Trump has made so many statements regarding, promising this, that, and the other, and a lot of them has just turned out to not be true. And because of that, the market now needs it to be confirmed in order for it to react. And I also quickly just want to point out the U.S. Energy Information Administration, EIA, because they have recently put out a prediction for WTI crude oil. And as you guys can see, that right about now, right, well, then oil is just going to go downhill. And by the end of 2026, right, well, then we're essentially looking at oil consistently below $80 a barrel. And that's back within a fairly, healthy range. By the end of 2027, it is again hovering between $60 and $80 a barrel, which is exactly what we want to see. So no, I don't think this is a long-term problem, but again, it is a short-term problem. And if oil wins this competition, well, then again, things could get ugly extremely fast. Now, the big question is this a bubble like we saw in the early 2000s, or is it not? Well, let's have a look at it. Well, in my opinion, this is not the dot-com bubble, but valuations are getting stretched, and the gap between real earnings and priced in hope, which is exactly what we saw in the dot-com bubble, is where the danger lives. So again, Nvidia, 34 PE. They are printing real profit, right? Infrastructure demand is genuine, and the multiple is rich, not absurd. But if we look at a stock like Palantir, you can see that the PE here is 170, right? It's down on the day, in fact, and it has extraordinary growth, but the price already assumes that years of flawless execution, or it's already pricing in sort of a perfect future. And that was the exact problem we saw with the bubble in the early 2000s. Investors were just pouring in billions of dollars into companies that had no revenue behind them, no long-term plan, and they were essentially pricing in a perfect future. And of course, that resulted in a massive crash. So this is why I would not call the entire AI trade fake, because again, Nvidia is printing real earnings. The infrastructure demand is in fact real, unlike the early 2000s. But some AI names are clearly pricing in perfection, and that is exactly where the danger is. And in this case, I'm referring to Palantir. And I also do want to mention that part of the reason why AI has been able to drag up the market so far is because it's entirely new. When the AI hype fades, right, and it becomes sort of normal and just infrastructure, well, then again, the market can come down quite fast and people will start rotating capital. If that happens, well, then that's where the fear of that shield being broken actually lives. So as long as the hype can sort of hide the oil situation that we're seeing, well, then everything is good. But if that hype fades and people start to realize what's actually going on, well, then things can become dangerous really fast. That's why it's important that we, in fact, do see a resolution of all of this before that hype fades. But again, this is purely my opinion. You can do with this information exactly as you will. And again, as you saw in this video, I even listed out stocks that I do believe have a great future. So it's not as if I'm telling you to rush and sell everything. That's not at all what I'm saying. I'm just exposing you to the potential downside because I believe as investors, we need to be optimistic and we need to understand what the worst possible scenario actually is. Overall speaking, stocks are great. We're all making money and we're all happy. Let's keep it at that until the actual disaster happens. So again, ladies and gentlemen, I appreciate you for watching this video. Now, make sure to like the video if you liked it, subscribe to the channel. I would seriously appreciate it. And without further ado, I hope to see each and every one of you within our next video.